Assalamualaikum warahmatullahi ta'ala wabarakatuh to Dr. Zeti and my fellow classmates. Today we will present about consumer credit, investment and retirement planning, estate planning and future financial challenges.
Consumer credit or consumer debt management can be defined as the way of controlling money because credit needs to be paid. Consumer credit is a power to buy or borrow on trust. There are two types of consumer credit, which is open account credit and loans. Open account credit. The first one is credit card. Can apply for credit card at any conventional and Islamic bank. The credit card is offered to individuals by banks in conjunction with credit card companies such as Visa and MasterCard. There are two groups of credit cards such as standard cards and premium cards, which is gold, platinum and black cards. The advantage is convenience since there is no need to carry cash, easier to use, purchase protection where if you buy some faulty goods with your credit card, normally it will be 100% insured for a month or two. The disadvantage, easy to get in debt, the risk of fraud, overspending, cost related since interest charged to outstanding balance can be very high. In addition, a card holder may need to pay for a penalty due to late payments, annual fee, and if making cash withdrawal, the interest is calculated from the day the cash is withdrawn. The next is fraud prevention on credit card. The first one is, when you receive your new credit card, always check the card is in your name. Destroy the old card by cutting it, make sure the chip and magnetic stripe portion is completely damaged. The second one is safeguard your personal identification number PIN. The third one is, when using your card at retail outlets, protect your card as if it was cash and ensure that it is in your possession at all times. Check the charge slip and its amount. The fourth one is, when making online purchases, only give your credit card details on reliable websites and companies that you trust. The five, check your credit card statement and report immediately if there are any transactions that you do not recognize or unauthorized by you. 6, if the card is stolen or lost, immediately report to your bank. And lastly, notify the bank for any changes in address.
Second, charge card. Charge card must be paid in full each month. If the balance is not paid on time and in full, penalty fees will be added. American Express is an example of a well-known charge card. Third, revolving credit lines. It was offered by a lender other than the bank. It can borrow up to a pre-arranged amount known as credit limit and repaying the outstanding balance or plus interest in order to continue borrowing against the amount again and again throughout the duration of your facility. Lastly, retail charge card. Department store and petrol stations offer customers a retail charge card facility primarily to encourage them to purchase goods and services from their store. Customers spend first and are billed later, but this type of card is not available in Malaysia. There are three types of loans. First, personal loan. A personal loan is an amount of money that can borrow to use for a variety of purposes such as medical bills, wedding expenses, home renovations or repairs, vacation costs and others. Personal loan can be secured, meaning you need collateral to borrow money, or unsecured with no collateral needed. Personal loans can vary greatly when it comes to the interest rate, fees, amounts and repayment terms. Second, car loan. It was taken to finance the purchase of new or used car. It is secured by the car purchase. The hire or loan borrower has possession of the goods remains and he has the option to buy the goods. The ownership of the goods remains with the owner, for example a bank, until the loan is fully paid. Lastly, education loan. Finance up to the full cost of education. Students must be 18 years old or above. For full-time students, there will be a joint borrower between the student and co-borrower, for example, parents, siblings, relatives or guardians. For part-time students, must provide one guarantor, parents, siblings, relatives or guardians.
Next is investment planning. Investment planning is the process of identifying financial goals and converting them through building a plan. Investment is the commitment of current resources or money with the expectation of receiving a larger amount of resources in the future. We invest to make money in order to improve our welfare, for financial security, to have fund for emergency, to reach financial goal, and for a secure retirement. There are four types of risk in investment, which are inflation risk. It can reduce our real purchasing power as change in the price of goods and services due to inflation affect investment return. Second, interest rate risk. The risk associated to changing market interest rate, which mainly affect fixed income investment, such as bonds, preferred stock, and share. Third, market risk, that related to the uncertainty of markets due to changing political and social conditions. And last, business failure risk, that arise may due to a possibility of bad management, unsuccessful product, competitive or any other factor that will cause the business to be less profitable. There are a lot of opportunities nowadays to put our money and let the money grow. In other words, there are many types of investment alternatives available in the market. The most common investment that an individual will have is to save in a saving account. Next, investment in fixed deposit, investment in share, investment in bonds, investment in real properties, investment in unit trust. All investment must be permissible to gain barakah or good benefits.
Retirement planning. Retirement can bring the definition of withdrawal from a regular occupation, and normally the word is associated with age. To simplify, when you get older, you will retire from your occupation and you will no longer receive a salary. That is why it is important for an individual to plan for their retirement. This is because the first one is the person wants to live in a comfortable standard of living during retirement, where you get no salary, so you can't afford to buy anything if you have no money. So how could you afford a comfortable standard of living? The second one is to determine the level of income needed during retirement. What will happen to someone if they doesn't want to contribute to their retirement planning? The consequences. The first one is healthcare and housing risks include unforeseen medical bills. To give you the example, let's say after your retirement, and suddenly you have to admit into the hospital due to your illness, but you have no money to pay for the bills. Right now, retirement planning offers you to a savings scheme, so you have a lot of money after you retire. The second one, cause of lack of available caregivers and care facilities. Example, let's say when your child too busy or doesn't want to take care of you, yet have no intention to send you to the caregivers, so you have to bear the cost by yourself if you wanted to go to the caregivers instead of living alone. And the last one is financial risk, including rising inflation. Example, day by day, things get expensive. You might can afford to eat, but not to the medical supplies as it's too expensive. Guidance. How much should we invest for a retirement? In order not to experience the shortcoming during retirement, this is the guideline for retirement planning. The first one is you can estimate income during retirement. The second one is estimate the inflation factor. And the third one is estimate funding for certain shortfalls. It is important to engage in basic retirement planning throughout your working life. And it is never too late to plan for your retirement. But starting early helps to avoid any unnecessary stress. In Malaysia, The Employee Provident Fund, or EPF, is a significant source of income for retirement. EPF is also known as Kumpulan Wang Simpanan Pekerja, which is KWSP. It is a national social security organization operating through a provident fund. EPF provides retirement benefits for members by managing the members' savings. So, what is the source of EPF deduction? The first one is wages, second bonus, third allowances, fourth commissions, fifth payment for unutilized leave, sixth wages for study leave, and the last one is wages for maternity leave. After your retirement, what you can do with EPF withdrawals, which is your saving. The first one is you can purchase or build a house. The second one is you can use the money for investment. The third one is you can use the money for your child education. The fourth one is you can use the money for medical expenses. Next, you can reduce or redeeming house loan. And the last one is for retirement withdrawal.
Next is estate planning. Estate planning is the process of disposing of an estate after one death. It is a legally effective arrangement for the disposition and management of a person's estate according to Sharia and civil law. The examples of estate are land, building, house, cash, bank savings, share, insurance claims. Many people assume that their assets will automatically go to their loved ones when they die. In many cases, this is wrong. Many problems will arise without proper estate planning. That's why estate planning exists, to make sure that our assets are transferred to our loved one according to our wish, and to unlock the frozen asset of a deceased person in the shortest possible time and without incurring unnecessary costs. Estate planning is important to make sure that we can restrict our children access to their inheritance, protect our assets for unforeseen creditors, and many more. As a Muslim, we can choose to leave a will, or the asset can be distributed to fara'id. So let's move to the next slide to know more detail about what is will and what is fara'id.
Next, I will explain about a will. First, what is will? From conventional perspective, a will is a legal document in which you declare your wishes for your loved ones and how to distribute your assets after you pass away. And from Islamic perspective, Islamic will is known as wasiat, which is an ikrar or declaration of a person made during his lifetime with respect to his property or benefit thereof, to be carried out for the purpose of charity or for any other purpose permissible by Islamic law after his death. Under the concept of will, for a non-Muslim, he or she can distribute all his or her estate through a will, but for a Muslim, he or she can only distribute 1/3 of his or her estate through a will, and another 2/3 will be distributed through fara'id. The concept of a will involves three parties, which are testator, the person who makes the will, executor, the person to administer and distribute their estate, and beneficiaries, the person or entities who receive gifts under a will. There are 7 types of wills, which are individual will, mutual will, joint will, privilege will, Islamic will, which is known as wasiat, holographic will, and living will. Moreover, there are benefits of writing a will. First, declaring your personal liabilities or somebody else's rights to your assets. Second, a will is a way to ensure speedy and efficient administration of your estate. And third, writing a will is a way to avoid family disputes.
Although intention can be done orally, but sometimes the distribution of estate could lead to complications, especially when the husband has more than one wife. Next, faraid is one of the estate planning. Faraid is a part of Sharia law which stipulates how the estate of a Muslim is to be dealt with and distributed among the heirs after his or her death. The causes of inheritance under faraid are: first, nikah or by a valid marriage contract in Islam; second, wala relationship or bondage where the cause for the inheritance of the emancipator to the estate of the emancipated slave is the benefit of the emancipator over the emancipated person. Through this, the emancipator becomes entitled to inherit from the estate of the slave whom he emancipated, irrespective of whether the emancipator is a male or a female. Third, nasab kinship is relationship through the womb or blood. Through this kinship, the parents and whosoever is related with them and the children and whosoever is related with them will inherit. The following is the entitlement in faraid for the detailed explanation of one's entitlement according to faraid. First, for the husband who has son or grandchild from the son, he is entitled to 1/4, and if the husband no son or grandchild from the son, he is entitled to 1/2 of faraid. For the wife who have son or grandchild from the son, she is entitled to 1/8, and if the wife no son or grandchild from the son, she is entitled to 1/4 of faraid. Next, the father who have son or grandson from own sons, he is entitled to 1/6, and if the father with daughter or granddaughter, he is entitled to 1/6 of faraid. The mother with son and grandson or siblings or uncle, she is entitled to 1/3, and if the mother with husband or wife, she is entitled to 1/3, and beside none of above, the mother also will entitled to 1/3 of faraid. For the son, if he is the only son, he will take all the burdens of faraid, and if the son is sharing with daughter, the ratio is 2:1. For the daughter, one and no son, she is entitled to 1/2, and if the daughter is 2 and more but no son, she is entitled to 2/3 of faraid. The issues related to faraid are hibah and nominee in insurance, EPF or tabung haji. Hibah is transfer of ownership of the property free of charge by the person entitled to the property. Furthermore, hibah can be used to complement wasiat. Hibah is unlimited, and hibah is effective immediately, whilst wasiat is effective after 1/3. Nominee in insurance, EPF or tabung haji. In the Islamic law, nomination of the above are considered not valid or does not fall to the nominee upon the death of the deceased. It is still contrary to the faraid.
The last one is future financial problem. What is future problem? A person suffers from financial problems at one time or another, especially during a recession. They may have lost a job and do not have any saving money. The basic definition of financial problem is the difficulty in paying off debts.
Next, I will talk about the main challenges for future financial planning. Firstly is the rise cost of living. Day by day, cost of living such as cost for food, rent, and clothing increase rapidly. This will greatly affect those who have low income. Low wages are the main problem for most people who are living in the cities, since the price of raw materials of needs to everyone is totally out of control. Hence, it burdens the communities, and this does not include with house rent and vehicle installment to pay every month. Next is increasing debt of credit card and loans. Most of us cannot get out of debt such as credit cards, personal loans, housing loans, vehicle loans, and even education loans. This is because most of us cannot afford to buy necessities such as houses and vehicles and finance education expenses. So there will be a high interest for the balance of credit card which is carried to the next month and also the other loans. The third challenge is money spending exceeds income. Many consumers struggle with the basic challenges of having an income that doesn't cover the expenses. Next is no emergency fund. Unfortunate things can happen such as being fired, involved in a car accident and unexpected injury. Lack of budgeting and money management skills are also one of the challenges. For someone who do not know how to do financial planning, it will be hard for them to build better financial planning for the rest of their life. And lastly, not having enough saving for retirement. Some people don't have retirement planning because they have a lot of debt or overspending their money. Next, I will talk about how to overcome the main challenges. Firstly, you need to limit your spending. You need to track the expenses to build a budget that works and cut unnecessary expenses. You also need to increase income by doing a part-time job to earn more money or even do side business. After that, the next way on how to overcome the main challenge is to improve budgeting and money management skills. Please refer to someone who have an experience in financial planning, or you also can pay for financial consultant services for an advice regarding the financial status. After that, make sure saves for retirement. People need to make sure they have Employee Provident Fund or EPF in order to save more money for their retirement and apply for insurance to cover medical expenses. Last but not least, I will talk about the advantages of future financial planning. The advantages are correctly manage cash flow, achieve personal goals, clear retirement goals, and you can secure retirement income. In conclusion, it is important for us to plan our own financial so we can avoid from all these challenges. We will prepare ourselves to face future challenges of financial planning to make sure that our financial position is stable and safe. I want to share a quote by Alexa von Tobel. A good financial plan is a roadmap that shows us exactly how the choices we make today will affect our future. So guys, start saving now. That's all from us. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi taala wabarakatuh. Thank you.